James had always prided himself on being financially responsible. He paid his bills on time, avoided maxing out his credit cards, and never missed a payment. Yet, no matter what he did, his credit score seemed stuck in the low 700s. He'd heard that an 800-plus credit score was the golden ticket to lower interest rates, better loan approvals, and financial freedom, but it felt like an impossible goal. Then, one day, James had a frustrating experience that made him realize something was wrong. He applied for an auto loan, confident he would get the best possible interest rate. But when the loan officer pulled up his credit report, the offer wasn't what he expected. Instead of the super low rate he thought he'd qualify for, he was given an offer that was a full percentage point higher than what he had seen advertised. The reason? His credit score wasn't high enough. Confused, James asked what he could do to improve it. The loan officer shrugged and said, "Just keep doing what you're doing." But James wasn't satisfied with that answer. That night, he did some digging and found out something that shocked him. Banks don't want people to have perfect credit scores. The reason was simple. Banks and lenders make billions off of people with good but not great credit. Those with scores in the mid-600s to low 700s end up paying higher interest rates, which means more profit for banks. People with scores over 800 get the best rates, meaning banks make less money off them. In other words, the system was designed to keep people from reaching 800. Determined to beat the system, James started researching credit score algorithms and strategies used by people with the best credit. He quickly realized that paying bills on time was only one part of the equation. There were hidden factors that made a huge difference, but most people never knew about them. By the way, if you want to learn more secrets banks don't want you to know, subscribe to Finance Family and stay ahead of the game. One of the biggest secrets James discovered was about credit utilization. He had always heard that keeping his credit usage below 30% of his total limit was good. But the real trick? The people with the highest scores kept theirs below 10%. That meant if someone had a $10,000 credit limit, they never let their balance exceed $1,000. So James changed his strategy. Instead of letting his balance rise throughout the month, he paid off his purchases multiple times a month. If he had to make a big purchase, he paid it off before the statement closing date, so it never even showed up on his credit report. Within just a few months, his score jumped nearly 20 points. Then, James found out something even more shocking. How often he paid mattered just as much as how much he paid. Instead of making one payment a month, he started making 2 or 3 small payments throughout the billing cycle. This trick, called credit cycling, made it seem like he was using even less credit than he actually was, boosting his score even more. But there was another mistake James had made: closing old credit cards. Years ago, he had assumed that canceling a credit card he no longer used was responsible. But in reality, it lowered his credit score. Why? Because one of the biggest factors in credit scoring is credit history length. The older the account, the better. So instead of closing old credit cards, James started using them for small, recurring purchases, like a streaming subscription or a monthly bill. This kept them active, extended his credit history, and improved his score. James also discovered that credit inquiries played a bigger role than he thought. Every time he applied for a new credit card or loan, his score dropped by 5 to 10 points. And worse, those hard inquiries stayed on his report for 2 years. Applying for multiple lines of credit in a short time made him look risky to lenders, even though he was financially responsible. From that moment on, he only applied for credit when absolutely necessary. But there was still one final trick James uncovered: credit mix. He had always thought that having just credit cards was fine. But he learned that people with the highest scores had a mix of credit types: credit cards, auto loans, mortgages, and personal loans. This showed lenders that they could responsibly manage different types of debt, which gave their credit scores a boost. As James applied these strategies, his score climbed steadily. He watched it rise from 730 to 750, then to 770. Every month, he saw progress. His dream of reaching 800 was finally within reach. Months passed, and James became obsessed with cracking the 800 credit score code. He had already made massive progress, but he knew there were still a few hidden tricks he hadn't mastered yet. One day, while reading a financial forum, he came across a strategy used by people with near-perfect credit scores: authorized user accounts. The idea was simple but powerful. If someone with a high credit score and a long, well-managed credit history added him as an authorized user on their credit card, his score would instantly benefit from their good credit habits. James reached out to his older brother, Mark, who had a credit score of 815 and a 15-year-old credit card with a flawless payment history. Mark agreed to add James as an authorized user on the account. James didn't even need to use the card. The moment he was added, the card's age and perfect payment record were reflected on his credit report. Within a month, his credit score jumped another 25 points. This was the game-changer James had been looking for. But he didn't stop there. He also learned about credit limit increases. Most people never asked for one, assuming it was unnecessary. But what James realized was that higher credit limits naturally lower credit utilization, one of the biggest factors in a credit score. So James called his credit card issuers and requested credit limit increases on all his cards. His income had increased over the years, and he had never missed a payment, so most banks approved his request immediately. His total available credit doubled overnight, making his utilization ratio drop even further. Another boost to his score. By now, James was well on his way to hitting 800, but there was one final test. He wanted to buy a house. He knew that mortgage lenders were extremely strict when evaluating credit scores. Even a slight drop could cost him thousands in extra interest payments. So he took extra precautions. He checked his credit report for errors, something he had never done before. Shockingly, he found a small medical bill from years ago that had been incorrectly reported as unpaid. Even though it wasn't his fault, it was hurting his score. James disputed the error immediately, and within a few weeks, it was removed from his credit report. His score increased again, just in time for his mortgage application. Finally, after years of strategic moves, James saw the number he had been chasing, 803. He had done it. He had cracked the system, outsmarted the banks, and secured his financial future. When he walked into the bank to finalize his mortgage, the loan officer pulled up his credit report and nodded. "You're in the top 1% of credit scores. You qualify for the lowest rate we offer." That moment made all the effort worth it. James had learned what banks never tell people, that achieving an 800-plus credit score isn't about luck, it's about strategy. It's about knowing the system and playing it better than they expect you to. If you've made it this far, you now know the secrets too. So start applying them today, and before you know it, you'll be in that elite 800-plus club, saving thousands on loans and securing the best financial future possible. If you found this valuable, make sure to like, comment, and share your thoughts. Your financial future is in your hands. Make the most of it.